Hello everyone, today is May 24th. It is a Thursday, 8:04 a.m. Welcome to another episode of Crypto Wars. Today, taking a look at all the markets. We're looking at, the whole spectrum. We're looking at the whole ecosystem, how it's all connected in one. We're not hodling. We're not riding the ship down. We're not riding the tanking Titanic, if you will. I've taken a lot of heat for talking about gold too the last 6 months, but if you think about it, in terms of BTC and like altcoins and things, it's actually been a very good hedge in the sense that it's a very stable, thing to kind of maybe take some profits from that one large run up that was before, right? Because if you try to trade a bear market, chances are you're not going to do very well because overall it's going down long term. Like, yeah, maybe you could make out with some good moves and things, but I think that what we're seeing right now is, clearly crypto was over evaluated. Like, one misconception of people is that, okay, they think majority of people are going to participate in cryptocurrency, or majority of people are, or whatever, or the masses are going to jump in. But the misconception with that is that 95% of people hold 1% of the wealth. So guess what? 95% of the people can jump in. That's only 1% of the wealth. 99% just exited with the 1%. You understand? So the human psychology it's all reversed, and what people value isn't based on how many people own it per se. It's about who owns it or how rare it is. Like, that's also another thing. So that's also another thing. Like, cryptocurrency is becoming less and less rare. There's tons of coins and spin-off of coins and forks and dilution on dilution on dilution. So I think that this was bound to happen, and it's healthy. It's all part of healthy growth of what feeds development. This huge climax gave a lot of resources to the space, so it could further development and also just awareness, right? So you find reason for it, but similar to the tech bubble, people think the tech bubble is this horrible thing, but that fueled like the economic growth of like a technological revolution that kind of led us to blockchain also at the end. So, but now it's just gotten ridiculous, like at least with the price evaluations with things and when people make it speculative. But if you're going to speculate, like, you need to look into other industries like gold and precious metals and things, because if you don't, you'll get wrecked. Like, that's all it comes down to. And even things like, people think that the Dow right now too is down in the futures, but the Dow is just a slow moving thing. It's just like this. I don't even know. It's like this. It just doesn't move, And when it does move, I wouldn't say indexes move very well. Maybe like tech stocks do, and like over long periods of time. Maybe like good companies kind of and things, but I don't know. I think that index funds, and I think they're just so in cahoots with the financial advisement firms, and how the financial advisement firms are networking and selling their stock for them. Like, that's just like anything else. Like, they're salesmen for stock, right? And they only can sell specific stock because it's intertied to the SEC and the regulators. So then you have it like, it's like this network of, extortion between the SEC, the financial advisement firms, and the corporations. See, when they're all interconnected, that's why these stocks can just keep rising and like slowly gradually rising, because people are just continuing to buy them. Like, it's continuous. It's every day. People are signing up to get their plans, and they're only for specific stocks because that's what the regulators make. So you only can buy these stocks, and only, we can manage your money this way. And that creates bubbles, and also intertwined with the loaning and the interest rates and the debt piling and piling and piling. It's like, yeah, gold's going to be worth more because, I saw, you saw a video of like Mark Dice handing out like candy bars or like silver bars and like people taking the candy bar, because their perception of its value is so skewed. And just like, that was a pretty good social experiment in the sense of like perception of value, and how people view things. But just gotta be careful, gotta be aware, gotta be vigilant, and kind of be ready for any type of scenario, and just always, be protecting yourself, and um, and also another thing too is people think gold is such a safe bet. It's like, you can look at the gold miners and like they think like it's too safe, like you're not gonna make anything off of it. But, like you look at the gold miners and like that's where it's at, and I don't even recommend it necessarily hold a lot of tangible gold. I think that's kind of ridiculous. You might as well produce more of it, actually contribute to productivity. If it just sits there, I agree. Like, it's kind of ridiculous. So, um, yeah, that's all I got to say. Peace.